Good morning, everyone. Andy here, coming to you this morning on August 28th, a Tuesday. We are in the last week of August. And I'll tell you what, we really do not expect much out of the markets here in the last week of August. It tends to be one of the slowest day trading periods of the entire year, oftentimes historically even slower than the week between Christmas and New Year's. However, crude oil has continued to offer a decent amount of reasonable opportunities. Are things a little bit more risky? Do you have to take stuff into account? Absolutely. But, there's been quite a few opportunities. Let's go ahead and take a look at today's action in crude oil. The DAX and gold. Gold in particular, the last 2 days, just too choppy for me to be real interested. Could you dive in there and dissect things and find some opportunities? Sure you could, but I'd prefer to take the, route that's a little easier, and that route today was in crude oil. So starting looking at 5:30 a.m., you can see we got a great short here, extreme black line cross. Our black line goes from the colored area over the white gap to the gray area, gets to the second gray line or lower. As long as we have a down closed bar, we're going to get that red arrow telling us we have an extreme black line cross signal. Boom, short, nice big winner available. If you watch that black line, very visual in nature, the Sniper Extreme black line cross trading system is. When you see that black line starting to come up and looks like it's going to cross over that white gap and get into the colored area, there's a good chance we're going to have a signal. Sure enough, that happens here. We get to the second colored line. As long as we have an up-close blue bar, we're going to get a signal. Boom. There ends up being 8 or 9 ticks available right out of the gate. If you're using the more robust stop management that I've been sharing and teaching over the last 3 weeks, you may have even held through if you were trading multiple contracts, or maybe you took an 8-tick profit target or a 9-tick target and then you got back into the trade at value as it pulled back, because as you're looking at your Pulse Extreme, you're seeing that it looks like this market has more to go. Our black line is not backing off. It's not pulling back. And sure enough, we get back in and boom, we're off to the races for another big winner. On the sell side here, the black line stays up for quite a while. We get this strong move down. You can see a nice winner on the standard Sniper. Got in a little bit more aggressive for a nice win. We did not get a standard or a black line cross signal until way up in here. So this bar that I highlighted with this arrow, I just wanted to highlight this. You can see we did get the black line cross, but it only got to -1. It only got to that first gray line. And that's not enough. It's got to get to the second gray line. And then the very next bar, now we're down to the second gray line or maybe the third. But the reason we don't get a signal is why? Because notice, look up, and you'll see that we have an up-close bar. The only time we're going to get short is on a down-close bar. So we have the next bar up-close, the next bar up-close. Look at what's happening all the while down here is the black line is moving lower and lower and lower. That tells us, man, we are definitely interested in this market still. Sure enough, signal fires, boom, nice winner. Okay, gorgeous looking trade and a perfect entry. Continue on, black line crosses from gray area over the white gap up to the colored area. Boom, signal fires, we're long. Have to hang out through the grind here to get a big win, but we got it. Okay. Then if you watch that black line, you'll see we cross into the gray area, but we do not get -2 or more with a down close, so we never get a short signal. But because we crossed into the gray area, we do get reset. And reset means we can get long again if the black line crosses back to the colored area with an up-close bar. And that happens here, long, nice winner. Next trade, a nice looking short. You're going to get stopped out on this one for a loser unless you're using a more robust stop management strategy like we've been teaching. In this case, you would have survived this trade, no problem. This bar, the black line moves against us once. This bar, the black line moves against us twice. So my stop would be above this bar. The market never comes out, takes out that stop. Instead, it reverses, and we are off to the races for a big winner. Same scenario, but this time on the sell side, the market moves up, the black line moves up and gives us a reset condition, but never spits out a long signal. We're reset, we get another short trade, another winner. And then we come up on our first losing trade of the morning. I think that was 6 wins maybe. And then just after 9:40, we get a buy. And this is a pretty decent buy. What I don't like about it is, you guys are well aware, I'm not a big fan of getting into a trade after we've had 1, 2, 3, 4, 5, 6 up closes in a row. I don't like as much, and it happens. I will take them, but I'm not as big a fan of that. And you can see we're not able to keep the move going, and that's a losing trade. You know what? We are not going to win them all, guys. Not even with the robust stop management. We are going to have a few losses here and there. So I think that makes us 6-1 if I'm not mistaken. We double top here at a minor resistance area, start to roll it down. The black line crosses from the positive area into the gray area. Gorgeous looking short. Boom, big winner. Then we had an interesting scenario occur here. We had a very symmetrical 3 lower lows, and this is an exhaustion pattern. This short signal fired, and you know what? It's a valid signal. We have the beginnings of the action line sloping down. It is in the direction of the short-term trend. If someone was being a little bit more conservative, they could have passed on that based on the fact that we were setting up this really nice 3 symmetrical lower lows. And based on that, there's definitely some reasons why one could have been a lot more cautious and held off on that trade, but we'll call it a loser. I think that is 7 wins, 2 losses. Guess what though? This pattern, right? This 3 lower lows exhaustion wedge combined with some upside divergence and so on makes this buy a very nice looking trade. Winner number 8. We get back up in here, and this was a cool sequence of trades. I talked about these trades live this morning. Well, a lot of these I did, but we highlighted this group of trades significantly in the live room today, and we talked about not being a big fan of this live trade at all. We just put in that nice move up off of those 3 lower lows. Exhaustion pattern, a nice explosive move to the upside. We're kind of grinding lower here. There were just a lot of reasons why I didn't like this short. When it failed, definitely I said, we like the long. We expect failure continuation. We got it. Nice winner. As this trade was setting up, I said a short in this area is definitely higher rated and a much nicer place to be looking to get short than that first signal. And I highlighted that before the signal even started to move lower. And you can see we got enough for a nice winner out of that trade. About 11 ticks available on the initial move. As this move came back, we talked about how if you took your profits off the table or if you were still holding, once this bar moved down here and we put in a lower high on our action line, it's minor, but it's there. We like the looks of this for another push to the downside. So if you took your profits off the table, maybe you're a 1 contract trader, when this pulled back and then started to head back down again, getting short on the close of that bar, the open of the next, another great trade. Boom, gorgeous winner. In the live room today, we highlighted a bunch of the reasons why this was a higher rated trade. You can see, as we're pushing higher here, we have the minor retest and the slight push higher. Notice in our oscillator, we did not break to a new high, okay, showing downside divergence. And then we put in significant downside divergence. Notice from the high pivot here of the price action, we put in equal highs in price action, but the os just kept moving lower and lower and lower. Strong downside divergence, just one of several different reasons why this was a much higher rated short than the first one, and that was fun to discuss in the live market. Of course, we didn't break out below the prior pivot low here. It held as such. We're anticipating another third higher high to form to complete the exhaustion, making this a decent buy here. I talked about in the live action how This would be a scenario personally where I would want to get in a little bit sooner. We have some tools and techniques that give us the ability to do that. We're currently looking at our more conservative chart. The standard, more aggressive chart that we use most of the year when we're not in the summer actually would have had us getting long a bar sooner. And that was a nicer place to enter in this scenario, giving you more room to get a profit target before you exhaust out. Nonetheless, we trade sideways here, form that 3 higher high, stretched out, boom, the short kicks in here, and look at the size of that move to the downside off of the 3rd higher high leg. Not quite as symmetrical or pretty as that 3rd lower low that we described earlier, but a similar concept, and you can see the results. So what does that work out to be? 1, 2, 3, 4, and 1, 5 and 2, 6 and 3, 7, 8, 9, 10 winners and 3 losses, 11 winners, 12, 13 winners on 3 losses. And we talked about, some decent reasons and how you could have avoided some of those losing trades potentially as well. So crude oil continues to trade at a very quality rate of success, even here in the last week in August. Not going to complain one bit. Those of you that are out there on your free trial watching us this week, might not be the most exciting week to be with us, but we're glad that you're there. Those of you that are viewing this recording that are not sniper owners, but you've kind of been watching from afar, I always do a special deal this last week in August annually. I just always do that, being one of the slowest times of the year, and we generally don't have as many free trial folks around. So those that do come out, we always make a little bit of a special offer. So if you're listening to this recording and you don't get an email from me, maybe because you're not on my radar as somebody who's interested in the sniper, I would encourage you to shoot me an email to check out what this special offer is all about. And you can do that by emailing me at ajc61@yahoo.com. That's A as in Andy, J as in Jack, C as in Cat, ajc61@yahoo.com to get the details on that. Those of you that are with me on a free trial should get those details sent out to you automatically here. So great day considering the conditions we're involved in. And hey, have a great rest of your day, and I hope to see you back here tomorrow for the Wednesday edition of Sniper Scalping. Thanks, everyone. Take good care.